Okay, thank you, everyone. And thanks, Mark, for the introduction. Also, besides being the president, CEO, and director, I'm also the founder of the company. And I wanted to talk a little bit about silver and why there's still a lot of upside in silver. But we have my corporate presentation from the website on here, so I'm going to go through that. If you want to ask me questions about silver at the end, you're welcome to. We should have time. So, forward-looking statements. You can get this from our website. All the risks, etc., that you need to be aware of. All the technical reports that this presentation is based on. So we have 3 silver assets, but the flagship is the Bethania silver mine in Peru. So that is what I'm going to spend most of the time talking about. So we're a producing silver miner. I think given our market cap, you'd be surprised that we're in production, but we are. We just are still ramping up the mine. So there's a lot of growth happening at the operation right now, and that's yet to be reflected in our share price. So I think it's a great opportunity, great timing to be looking at Kuya, and obviously with the silver price just recently hitting new highs as well. Our other projects are in Northern Ontario. It's a big district around a historic mining camp. And then Saudi Arabia is a JV with a Saudi company. They fund everything, and we have a back-in right if the project goes well. So the right commodity, other than just silver itself being an exciting commodity, there are very few silver mining companies at all in the entire world. There's probably about 10 or so. And that's if you include guys who produce over 40% of their revenue by silver. We produce 80%, maybe even more than that now with the higher silver price. So we're one of the richest or silveriest silver companies out there. And I think when investors want exposure to silver, they should look at us. Risk profile, we're already in production. The biggest risk that you've got in mining is time value of money. And years and years can go by while you wait for permits. We're already producing, we're ramping up the mine, we're making money, or we're soon to be making money. So that is that's the biggest risk we've already taken care of. We're in a mining-friendly jurisdiction. Peru's a very stable mining country, and we've got a strong balance sheet and no debt. The right growth strategy, I'll talk more about this later. We've got a big project, a big plan over the next 4 to 5 years to ramp up the mine even bigger than it is right now. Right capital structure, we have no immediate need for equity financing. We're under-owned by traditional mining funds, and we're not held by any of the mining ETFs yet. So I think all those guys are going to be incremental buyers coming into our shares. Previously, we've been too small with this recent market and getting recognized as a producer. We've started to move up. So I think it's just a matter of time before we get a lot of new buying in the stock for those guys. And then the right value proposition, we trade at our peers trade at pretty high valuations. I'll show you that in a second. And we're excited to become one of these highly valued silver companies in the next year or so. So this is my valuation work, which is, to be fair, a few months old now. The market caps of all these have gone up, but the valuation, roughly gives you an idea that when companies start making money, they trade at a minimum of 10 to 35 times current EBITDA, and if we trade at that with what we're expecting to make, in the next few quarters, we should be getting to 200 million pretty soon. Right now we're at 70, so that's roughly a triple from where we are right now. And then longer term, we have plans That's part of our 100-100 plan to make 100 million a year of EBITDA from our mine. And at that point, you're talking $1 billion plus company. Mark's done some very good work on more recent work on valuation. And so for those of you who are interested in this, I would encourage you to look at his recent report on us from November. Okay, now onto the mine. We're located in central Peru here. You can see just east of Lima, connected by roads. And, we're in a belt of kind of silver, lead, zinc mines that run along the Andes there. Very much mining country, this part of central Peru. And we've got a favorable, a good community that's supportive. Just good location, good logistics. Near a major city as well, about 500,000 people. So this is the most important slide in the deck. It's the 100-100 plan. This is our plan to grow production over the next 4 to 5 years. Starting on the left where we are right now, we've started up the mine. Now by sometime in the second half of next year, we expect to be at our phase 1 target of 350 tons per day. That would produce about 1.5 million ounces of silver equivalent, which remember is mostly silver. Should be at least 20 million of cash flow. Obviously, you can see I used a lower silver price, but there could be some inflation in the cost as well. Now, to get to the 100-100 plan, I'll come back to phase 1B in a second. The 100-100 plan is 100 million ounces of silver resource. Right now we're at 14, and 100 million of free cash flow. Right now we're just getting to break even. In order to do that, in order to get to the resources, we need to drill. Okay, so we are just starting to drill at the mine again after 4 years of a hiatus. Right now this month, and I think the drills will effectively never stop turning once we start. We have so many targets, we have so many places to drill, as I'll show you in a minute, that I think we'll end up with way more than 100 million ounces eventually. But it's a good target for now. And then in order to make 100 million a year of free cash flow, we roughly need to produce 5 million ounces a year at a $20 margin, or 4 million at a $25 margin would get us there as well. And to do that, we need to roughly triple the size of the mine. Excuse me. So getting back to phase 1B, one important CapEx project that we want to do in the future is build our own plant. Right now we're toll milling, so we're essentially renting someone else's mill to process and produce concentrate. When we build our own plant, which is fully permitted, we'll do that likely with debt, and it's about a 1-year payback. So it's a very low risk project for us. And that's something we may start next year. We're in negotiations now. Regardless, having that plant's important because it allows us the footprint to expand. Whereas with toll milling, we're probably capped in terms of how much we can produce. With our own plant, we can expand it, and then we're effectively unlimited at how big we can make this. Okay. Here's our total land package. It's 4,500 hectares. Our resource is located on about 15 hectares of it. Okay, so 0.3% of the property, just where that yellow star, where the Bethania mine is. The green squares where we're permitted to build the plant, and every yellow star is a silver deposit that we've found or followed up on from previous mining. So zooming in now in the central part, you can see where the veins are, the red lines that we've mapped. Our geologists go out into the field, they go find these other, vein systems, and they map them, we sample them. All the dots are where we sampled for silver. And so starting at the Bethania mine, you can see up in the corner up there, That's where all of our resources, all of our mining is occurring right now. Even close to that, we've still got a lot more, and I'll show you that in a second. But gradually we'll go and we'll drill all those other stars as well, all those other targets. And we expect that all of them will have resources because they're all past producing mines. And we'll add those and we'll truck everything to that green square where the mill will be. It's our current resource. So it's basically a bunch of veins that are all stacked together that we mine at the moment. And that current resource, which is 4 years old now, we haven't updated in 4 years, gave us a 7-year mine life at 350 tons per day. But we are finally able to drill now because we have the cash to do it. So we're drilling below the resource. All of our resources are in that red triangle. There's also been probably 5-6 million ounces mined out of there before we got the project. So that triangle geologically would be about 20 million ounces, and it's open at depth and open along strike. Strike is that way. So if we can just double the depth of these veins, that should give us another 20 million ounces. We're starting that process now with the drilling that we're doing in December and into Q1 of next year. And then you can see the white stars. That's where we found the vein system on the other side with some very, very high grade samples. So we know there's more on the other side of the hill. If you look top down, this is the same map top down now. You can see all the veins where we're mining on the left, where the Bethania mine star is. And then the other side of the hill is called the hilltop zone. And we've got another cluster of veins on the other side that's equal, if not bigger in size. So before we even leave the original mine area, okay, this is where all of our infrastructure is. This is where all of the activity is right now. Before we leave this area, we could have 3-4 times the resources that we currently have. And then we've got the other sites as well, each one of which has tens of millions of ounces of silver potential. So the newest one we just announced a few months ago is called Miacocha. There's 2 parts to it. There's 2 different deposits, Norte and Weste. And the bigger one seems to be Weste. And that's where we've got some of the highest grade samples that we've ever found at surface in the whole project. But we like these other ones as well. So we've got 3 different deposits. They're all about 1 kilometer apart. Carmelitas Norte, Este, and Main. And then the other one is directly south of the mine, Tito, about 1 mile south of the mine. It's a much bigger system, but all along a ridge where we've been able to map and sample it. So that's a lot of geological data, but just showing you that we're going to be drilling for many, many years here and just keep increasing that as we get to 100 million and then beyond. And by doing that, that allows us then to justify the expansion of the mine. So that's our $1 billion project, okay, Bethania. And the other project is Cobalt, Ontario. It's called the Silver Kings Project. I won't spend too much time on it, but we've got actually an even bigger land package, but it's an earlier stage project. All the mining here stopped about 40 years ago, so it's not something you can just go and restart. There's no resources, there's no permits. So we've kind of started from scratch here and actually made a new grassroots discovery a couple years ago by drilling through 200 meters of barren rock and hitting one of the richest silver holes that in that year actually. 15,000 grams over 3.34 meters. So that's 1.5% silver. Pretty special. You can actually see the silver, metallic silver in the core. So we've drilled this and followed it up, and we've found that it's a whole cluster of veins, but it's deep. It's 200 meters below barren rock on a hill. not easy to drill. So that's why it's still there. Because if it was easy, the old timers would have found it 100 years ago. So here's our cap structure. We're getting warrants exercised right now, so we probably closer to 150 million shares out. Very high management ownership. So we're aligned with our shareholders. I'm the biggest shareholder within that management group. So I'm most of that 9%. And you can see, again, we do have some institutional shareholders, but not many compared to some of our peers, which I'm happy about because that means they're incremental buyers as we continue to develop this story and grow the company. That is it.
I'll start off with a question just to get you started. I know you wanted to talk about silver. So let's just do that. Could you talk a little bit about, you put up your peer group and those were the silver focused producers.
Yep.
Could you talk about that group a little bit and kind of how you compare in terms of the purity of the resources in terms of the percentage of actual silver versus silver equivalents, which is, maybe a polymetallic resource, some of that's converted to, silver equivalent. And then also, why is there kind of a shortage of silver producers? And then I think that kind of lends itself to the nature of production.
Okay, well, if I go back to the chart that you're referring to, most, so you can see, the producers that are producing right now, 40 to 50% silver is very common. I think I just saw a thing with Keith Neumeyer saying he was 57%. And they're the biggest kind of pure silver producer other than Fresnillo, which is a Mexican one. And they're at probably a 50-50 silver producer, silver gold producer. So that's very, very common. Just geologically, pure silver deposits are rare. Aya does have one in Morocco, but it's almost unheard of to have a pure silver deposit. Most silver comes with either gold, copper, lead, zinc in our case, or some other metals. And so that's why that's one of the reasons why it's so rare to have pure silver companies. I think the other thing is that silver's been kind of the ugly stepchild of the mining sector for the last 45 years, actually. If you go back to, silver hit a high in 1980, and then it briefly hit it again in 2011. But it's one of the only, until this past few weeks, it's one of the only metals that hasn't been hitting all-time highs in this sort of recent last 5 to 10 years, like copper and gold, of course, and most of the other metals. So what's happened is actually silver companies have started to go into gold. Silver companies tend to trade at a premium. And so a lot of the successful silver companies of, let's say, the 2000s ended up buying gold mines and becoming gold producers. So there's, Fortuna, Pan American, Coeur, and Hecla even produce more gold than they do silver in terms of revenue. So that's why there's so few silver companies today, is that most of them have gone and become gold companies. There was more money to be made in gold.
I have a question also. Your valuation has to be predicated to some degree on the price of silver. And to your point, recently silver's taken a very nice advance. Does your production tie into the price of silver, and do you hedge ever on the price of silver?
We don't hedge, and obviously we get about 80% of our revenues coming from silver. So, as we ramp up the mine, we'll be very exposed, highly exposed to the silver price.
So you do not hedge on the price?
We don't hedge, no. We have a low-cost mine. We don't feel we need to hedge. We don't have any debt at the moment, so
You're
again,
committed to the price of silver.
Yeah.
Obviously, so if silver were to take a massive uplead or downlead, if it took a downlead, would you rein in on your production?
well, we're still ramping up our production, so we're not producing as much as we should be in the next few months and quarters. So our focus is developing the mine right now. We're not gonna turn it on and off depending on the silver price. Our costs that we expect once we ramp up is still gonna be sub $20 an ounce. So the price would have to go pretty low before it would cause any question about production for us.
20, is that right?
We think it'll be 20 or less, yeah.
20 or less.
Yeah,
And the price of silver is,
58 today,
so every ounce you take out, you're saying you're making
$38, yeah.
impressive.
So my question is, why did you not decide to go on the NASDAQ and you're an OTC company instead?
It's not that we decided not to. We started as a micro cap company. We still only have about a 70 million US valuation. So I think we would look at going on NASDAQ eventually, but the costs, for the SEC compliance and stuff to be a public company in the US are much higher. So it's something as we get bigger, we could probably afford, and we'll look at doing probably in the next year or two.
Yeah, because the NASDAQ, to be on the NASDAQ, they do much more due diligence on the companies. And as an individual investor, I feel more comfortable purchasing equities that are on the NASDAQ, plus I'm not paying commission. When I do anything on the OTC, I have to pay commissions.
Yeah, that's fair. Well, you got to start somewhere.
You mentioned you got the permits for plant that you're building. How much of that CapEx would be financed through debt?
Yeah, we probably would do 100% of it with debt. Yeah. Well, we have about 10 million of cash ourselves, so we can put some cash towards that ourselves. But I guess the important thing is we're not looking at raising equity to fund that plant. It'll be a non-dilutive financing when we go ahead with it. Yeah.
Two unrelated questions. One is, you mainly talk about Peru. Is there anything going on in Canada as well? And then the second one is family offices. How many family offices are that 50%? The 50% you showed. How many family offices?
Well, okay, so I'll answer the family offices first. There's probably 5 to 10 that own 15%, but it's growing all the time. It's still an active market for us where we're having a lot of success. And in Canada, yeah, I mean, I don't talk a lot about it because I feel like we don't get any value for it anyway, but we are trying to figure out a way to get some value out of that project, whether it's to spin it out or sell it or something, because we do like the project. We do think it's very valuable. Right now, we're actually doing a metallurgical program there. We think that it may be possible to recover silver there from tailings or from some of the stockpiles that are left from the remnant mining. So we're actually doing a program on that right now. It doesn't cost us very much to do all that testing. We've just completed the field work for that, so now it's the lab. We have to wait for the lab to do its thing, and that'll take a few months. But we hope to have some good results, and then again use that as a lever to create some value, because for our shareholders right now aren't getting any.
There's no active mining.
No, not right now.
With more than 6,000 small and micro cap companies listed, if you're looking for the next Apple, then Channel Check truly is the orchard. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series lunches, and to be part of the preeminent annual Small and Micro Cap Investor Conference, NobleCon. And here's the best news. Since Channel Check is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.